Welcome to Geojit Spotlight. We are at the fag end of 2024. A very eventful year for the stock market. Has been very volatile because of a few reasons like election and wars, the budget, etc., etc. And in the previous episode, we had three analysts who gave us the view on the sectors that they were looking at. This time I'm here with two new analysts of Geojit, Mr. Vincent and Saji. Vincent, you handle FMCG and cement sector. We would want to know how 2024 was for the sectors that you're following and what's the outlook for 2025.
As far as the FMCG sector is concerned, if we see the last 1.5 year performance, it was underperforming to the broader market. The main reason, if we analyze in FY24, it was mainly due to the below normal monsoon, the heat wave, and the lower reservoir levels. It all impacted or disrupted the rural economy, and the food inflation. Food inflation increased, and it impacted finally the rural demand. So all the FMCG companies have impacted their their revenue as well as margins have impacted. And when we come to the first half of FY25 this year, with the support of above normal monsoon, and even though the rural demand is picking up gradually, but on the other side, the urban demand has come down. So there is a slowdown in the urban demand. And when we analyze the reason for this slowdown in the urban demand, we can see that there was a lower growth in the wage, and which along with the high food inflation, it has impacted the disposable income. At the same time, we can see that in the first half of this year, the government spending, both the central government as well as the state governments, their spending has come down by around 15% compared to last year. It was around 37% of the budgeted amount of the last union budget. So this has impacted the urban income and impacted the urban demand. Going forward, we can see as per the first advanced estimate of the kharif production, it is expected that it will be this year will be a bumper kharif production, around 5.7% increase we expect compared to the last year. Okay, and around 8% from the average kharif production. So this will give this will accelerate the rural demand, and it can result into decrease in the food inflation. So, and on the other side, if we come to the urban, we expect that the government spending will increase. Already the elections are over, so the government spending will increase or accelerate in the second half of this year. So that will support the urban demand. And with the food inflation, it has already started declining. Though some major inputs like edible oil, etc., it is on the higher side. So we are cautious on the upcoming Q3 result, but we are positive in the long.
So for FMCG, you are saying that the rural demand might increase in the coming year with the urban remaining stagnant or moving up slowly. So which will be a gradual increase for FMCG sector.
Yeah. Currently, the rural demand is gradually picking up, and it is not fully compensating for the decline in the urban demand.
So would you say it is a cautious approach for, should we take it like that?
We are cautious in the near term only, but with the bumper kharif expected this year, and we also expect that the rabi season, the weather conditions are favorable for the next rabi season with a better reservoir level, etc. So we expect both the kharif as well as rabi season will be good.
Okay, so rains will help this also.
For both the demand as well as the margin, the cost will come down. So long term outlook is positive, but we are a little bit cautious for the near.
Okay, and what about the cement sector?
For cement sector, if we see the FY24 performance, uh, it was good both in terms of revenue as well as margin. But it was actually supported by the higher spending or higher demand from the housing and infrastructure sector. So as we know, FY24 budget, there was a good focus in infra and housing from the government side. So the infra spending was around 35 percentage growth, and housing was around 20 percentage growth. Out of the total cement demand in India, around 85 percentage of the contribution is coming from housing and infrastructure. So that was good from the budget perspective. When coming to the first half of FY25, the performance was not that good uh, since the demand was coming down. Mainly two reasons. One was the election year, and another reason, because of that, the government spending has come down. So another was monsoon quarter. So because of this low demand during this period, the cement prices have been on a declining trend. It was consolidating, or we can say it has come down by around 10 to 12 percentage. So that has impacted the top line as well as margin also. So going forward, we expect that with the expectation of expedition in the government capex, etc., the demand outlook has improved now. And at the same time, it will help the cement prices to improve.
Okay, so you are seeing cement prices to go up in 2025?
Yes, cement prices already some companies have taken price increase in the December month. So we expect it will sustain, because that there is a support for the demand. It was not there in the first half. So demand as well as realization will improve. And on the other side, on the bottom side, the cost, that is the fuel cost, that is around 20 to 25 percentage of the cement company's total cost. It is also coming down. And addition to that, all the companies in the cement sector are taking steps to increase their green power mix. That will also bring down the power and fuel cost. So on the top line front as well as cost side also, it is benefiting.
So you see growth in the cement sector for 2025 also. So should it be a cautious approach or a bullish approach?
Actually, for an investor perspective, we should look at the valuations also. So, factoring all these positives, most of the cement companies are on the valuations are on the higher side. So, our approach is, or we suggest to have a stock specific approach and have a buy on dip strategy.
Okay, for this sector, so it is for cement, it is a watch, stay calm and buy whenever it falls.
Yeah, since the valuation is on the higher side.
What should be the strategy of an investor holding stocks in these sectors like cement and FMCG? Like if I'm holding stocks in these, what should be my approach in 2025?
For cement sector is concerned, since the valuation is on the higher side, as already suggested, some stocks are having uh, some comfort in the valuation. So from the cement sector, our pick is Dalmia Bharat, which is trading at a 12 multiple on FY26 EV beta. Uh, there is a potential for re-rating for this stock, because we believe that they have a strong expansion plan.
You are saying Dalmia is a buy for new investors also.
Yeah, Dalmia is a buy because of it is compared to other stocks, and they are having a good potential for re-rating also, because they are planning to expand from current 47 million ton to around 75 million ton in by FY28, and they have a plan of reaching to 110 million ton by FY31. And so currently they are focusing on in south as well as eastern markets, but they are planning to become a pan India. So they will get.
What should be the approach if I'm holding some other stock? Like should I hold on or sell? or buy more?
Since the long-term outlook is positive, they can hold the stock and buy on dip strategies also.
So it's a buy on dips for the people who are holding cement and FMCG.
Yes.
Vincent, suggest me maybe a few stocks that I would want to buy in 2025 in FMCG and cement. Do you have any stocks aligned?
For FMCG sector, since we are cautious in the near term, but long-term outlook is positive. Uh, However, the sector valuation, though it has come down from expensive region from around 44 multiple PE to around currently trading at a 38 multiple. Uh, but it is one standard deviation above the long term average. But some in industry leaders, they are trading below their long term average. So like Tata Consumer, Nestle, Britannia and HUL, they are trading below their long term average. So they can hold the stock since the long term outlook is positive. So we are cautious for the Q3 results. Some more correction is possible for the those stocks which are valuing at higher levels.
Okay. Saji, you follow a very, very hot sector, that is auto ancillary and auto sector with IT. My question to you first would be on the auto side. We see a lot of new cars coming in, commercial vehicles set to come up in 2025. So, what was 2024 for you? How was it? And in 2025, what do we have in store?
First of all, if I talk about the FY24, it was a bumper years for all the auto manufacturers. Post COVID, we can see there are a lot of pent up demand coming up, and industry was performing really well. Meanwhile, there was a transitional for EV was there, and there is a consumer behavior also we can witness in the car manufacturers, where SUV demand is also playing a major role in it. So, FI last 2 years, we can say that there was a lot of outperformance in the broader market. But if you see in the last 6 months, industry was estimating around 10% kind of growth, but it came below that, significantly below that in the earning estimates. So we have to go for a rethink about what went wrong. Though the urban demand has supported in the last 2 years, but it's shown a little bit slowdown because of the EV ramp up. Have a little bit shown a muted side. There is a regulation change was also there because the government incentives government has removed the incentives. So this has also affected the ramp up in the EV sales. But on the export side, it was supporting for most of the two-wheeler manufacturers. Though passenger vehicle manufacturers are not that keenly looked into the export side. Now, if you talk about on the second half, what we are seeing is that the export and the rural upliftment will be really supporting the sector. On the urban side, what we are seeing is that the growth is, as Vincent has already highlighted, that the growth in the urban market will be on this lower side of the economy. It definitely want to support this, but on the rural side, we are seeing more growth compared to the urban side. So we see that the export, favorable export, and the growth coming from the rural side will definitely support the overall industry. That if I go by segmental wise, the two wheelers is likely to get the benefit of it, and the segment wise, if you see, the two wheelers will be the first advantage that we are seeing. On the PV side, what we are seeing is the inventory level is going to be on the 60 to 65 days higher, so which definitely can bring the sales a little bit on the lower side. Since it is an year end, there is a massive discounts which is being given by the OEMs. On the retail side, what we are seeing is that the demand is lower. But we're going to support if there is a discounts giving by the OEMs going to support to some extent, and there is also postponement which is also there for the next year to get the new models. So that is also something which is going to put the PV sales on the lower side. On the commercial vehicle, what we are seeing is that as you all know that this is the first half was election year and the demand was slow. Um, but what we are saying is that there is a shift to what we are seeing in the high tonnage category, where the demand is have shown momentum, as well as on the best category, where there is a transition on the EV side. So the second half, what we are seeing for the what they call the commercial vehicle, because of high base, we have a low single digit for the commercial vehicle, and the passenger vehicle. What we are seeing is that would be also in the 5 to 6% range, and two wheeler will be we are seeing around 10 to 12% kind of growth that we will be reflecting on the two wheeler side.
Okay, so in EV, is EV going to be a game changer according to you in this sector?
Yeah. Definitely, EV, the euphoria for the EV is still there and is definitely going to continue. The lot of companies are coming with their new models with a different version. But what happened is that like the global outlook for the EV has came down, so which has affected the overall industry, transition. The ecosystem is because of the ecosystem which is not supporting to that level, and the price was also on the higher side. So we think that maybe there is a possibility of the multiple powertrains acting into this. Not only EV, there will be a space for hybrid and IC engines too.
Okay, so now in your two-wheeler segment, you said there'll be growth in the rural sector. Do you see growth in higher-end bikes coming in rural sector from the old sub 100 cc getting bought in the rural sector? Is there a demand for higher-end bikes in the rural sector?
There was a demand. There is, for example, Bajaj, who have stopped, manufacturing below 125 cc. So, and they are actually getting into CNG too. So there is a shift what we can see, but still we see that in the last quarter, what we are seeing is the demand is largely coming from the entry level segment, which is 100 to 105 cc. So I think the shift will be there, but it will be on a it will be on a staggered basis.
Okay. And what about IT? After your rolling wheels, what is IT do? What is your outlook on IT? Because, the new government taking phase in US.
Yeah. So on the IT first quarter two, what we're seeing was slow. Um, on the full year of the FY25, what we are seeing is that the discretionary spending started showing sign of uptick amid the macroeconomy uncertainties in the key markets like US and the Europe. But still, we are seeing that the BFSI segment is showing performance in the last outperforming, and it has been compared to the other markets, other segments. The BFSI is showing last 8 quarters. It is showing improvement. On the healthcare and on the communication side, what we are seeing in the healthcare, which is definitely gonna the new government spending will definitely gonna help because of AI integration. But for the communication, we think it's going to be delayed, and it will be showing some kind of sign of pickup maybe in the second half of the next year. So. But overall, the surprisingly, what we are seeing is that the India story is actually playing a very beautiful role, because from Asia Pacific, if you see that there was from single digit, it has gone to the strong double digit of the geographical mix. So I think this could be associated. This can be largely associated with the government spending on the AI integration part and the capability side. The on the operation side, what we are seeing is that third quarter uh, uh, will be a lower side because of the seasonal furloughs that we have, and the limited working hours, and the wage increment which is expected. To some extent, the operational efficiencies that every companies are planning gonna support the margin, show some kind of respite in the margin, but still we expect there are 200 bips of margin dilution, which is likely to happen due to seasonally lower quarter. Now, on the future, what we are seeing is that definitely uh, spending in the BFSI sector will show some kind of momentum in the large cap IT stocks, which have a major share in the BFSI space, and which have a higher geographical mix in the US. On the other side, like India, what we are seeing that the momentum is likely to continue around 372 crores of the AI integration capability that the government has allocated. But still in India, what we are seeing is the reskilling and the redevelopment for reskilling of the employees which is going right now. So, what we are seeing is that though the margin, we are seeing some kind of resilience, but still uh, uh, the new government which is coming in US, we have to look forward how the employee expenses which is likely to could be the visa processing fees, other expenses which going to affect the overall margin. So we have for the time being, we have a cautiously optimistic view on the IT space.
So you're optimistically cautious where IT is concerned for 2025 and bullish for auto?
No, we are not bullish. We are selective on the bullish.
So stock specific?
Stock specific on the views, it's not sector as a whole.
Okay, so stock specific bullish in auto and optimistic cautious approach in IT. That's for 2025. Would you recommend as in stocks to buy in IT sector and auto ancillary?
So if I talk about the auto sector, as I said that as Vincent is already highlighted about the rural improvement, 80% of the revenue for the Hero Motocorp, which is around the entry segment, constitute from the rural sector. 80% of the revenue coming from the rural sector. So we have a positive on the Hero Motocorp. Second thing is, as I already highlighted, that we are favorable for export. So we have a top pick for TVS Motors, which have also a presence in the urban, who have the largest presence in the scooter market. So we are also positive on the TVS. So TVS and the Hero would be on the two-wheeler side. We still believe that the SUV story likely to continue. So we have the top pick for Mahindra and Mahindra. On the IT space, since we see that we like to stick with the companies who have a more major share in the BFSI space and who have a larger geographic mix in the US. So our top pick will be the LTI Mindtree and the TCS. I also like to suggest a few other stocks which is not in our coverage, but still we see that there is a lot of momentum happening in the global capability center space. So not only in the global capability centers, on the data center space. So the companies are actually getting some kind of engagement with the global players. So there also we are seeing a lot of attraction. We would like to recommend as a sector for the future investors.
Viewers, so we see in this episode that it's a very cautious, optimistic view in the sectors that we have covered today. Hope you've watched this episode along with our previous one. Till we meet again, happy investing.